Welcome back to The Breakdown with me, NLW. It's a daily podcast on macro, Bitcoin, and the big picture power shifts remaking our world.
What's going on, guys? It is Thursday, April 24th, and today we are talking about the remaking of Bretton Woods. Before we get into that, however, if you're enjoying The Breakdown, please go subscribe to it, give it a rating, give it a review, or if you want to dive deeper into the conversation, come join us on the Breakers Discord. You can find a link in the show notes or go to bit.ly/breakdownpod. Well, friends, tariffs continue to be the most important driver in markets, but a relatively quiet day in the headlines led to one of the least volatile trading sessions of the month. Stocks opened strongly after the latest news of de-escalation was digested overnight, but pared back gains throughout the day. Bitcoin traded in a tight range around 93,000 as traders waited for the next move from the administration. The Indian trade delegation was in town for their turn at the negotiating table. Economic Affairs Secretary A.J. Seth said that the first-order impact of U.S. tariffs would cause GDP to drop between 0.2 and 0.5%, something he called not a huge impact. However, he added that, quote, the second order would be important. The second order is if the global economy grows less than expected. Bloomberg reports that the bargaining chips on the table are the removal of tariffs on bourbon and high-powered motorcycles. Similar to the idea of importing American trucks to Japan, it seems like this administration likes the idea of Harley-Davidsons on the streets of Mumbai. Perhaps more importantly, the Wall Street Journal reported on a rumored policy shift on China tariffs. They characterized the move as a, quote, bid to de-escalate tensions with Beijing that have roiled global trade and investment. One senior White House official said that China tariffs were likely to come down from their current 145% to between 50 and 65%. There's also apparently a plan to apply Chinese tariffs in tiers across different sectors. Items that the U.S. deems to not be a threat to national security will see a 35% tariff, while items that are deemed as strategic U.S. interests will have 100% tariffs applied. This style of approach was proposed by the House Committee on China late last year. Notably, the accompanying bill proposed phasing in those tariffs over 5 years rather than 5 minutes, but here we are. Beijing has now signaled that they are open to trade talks with the U.S., but warned that they wouldn't negotiate under the shadow of continued threats from the White House. WSJ sources familiar with Chinese policy circles said that Trump's comments from Tuesday were viewed as a sign of him folding. Bristling at the idea that he was capitulating, Trump reiterated to the press that China tariffs were still at 145%, stating, I haven't brought it down. Circling back on the events of the week that led us to this point, Axios reports that Trump met with the CEOs of major retailers including Walmart and Home Depot on Monday. An administration source said, the big box CEOs flat out told Trump that prices aren't going up. They're steady right now, but they will go up. And this wasn't about food. He was told that shelves will be empty. James Surowiecki, the author of Wisdom of Crowds, wrote, these stories are amazing because they all involve people telling Trump what everyone else already knows, but which he's somehow been oblivious or indifferent to. Still, overall, this was one of the slowest days of tariff news since Trump unveiled his poster boards in the Rose Garden 3 weeks ago. But that doesn't mean that there weren't some interesting signals to be seen. Throughout the week in Washington, annual meetings have been held for the IMF and World Bank. Yesterday, Treasury Secretary Scott Bessent made it clear that the global institutions are falling short in the eyes of this administration. In a speech at the Institute of International Finance on Wednesday, he said, the Bretton Woods institutions must step back from their sprawling and unfocused agendas. The IMF's mission is to promote international monetary cooperation, facilitate the balanced growth of international trade, encourage economic growth, and discourage harmful policies like competitive exchange rate depreciation. Bessent committed the administration to playing a continued leadership role in the two organizations. However, he said that the White House would, quote, demand that the management and staff of these institutions be accountable for demonstrating real progress. Bessent added, the IMF and World Bank have enduring value, but mission creep has knocked these institutions off course. We must enact key reforms to ensure the Bretton Woods institutions are serving their stakeholders, not the other way around. The speech was littered with references to social and diversity agendas adopted by the institutions over the years, with Bessent stating, these issues are not the IMF's mission. He stopped short of announcing a withdrawal from the institutions, which had been proposed in the Heritage Foundation's Project 2025. Instead, he declared, America first does not mean America alone. To the contrary, it's a call for deeper collaboration and mutual respect among trade partners. The Treasury Secretary expressed a belief that the two institutions, quote, serve critical roles in the international system, and the Trump administration is eager to work with them so long as they can stay true to their missions. Turning to the ongoing trade war with China, Bessent said, there's an opportunity for a big deal here. That the U.S. is looking to rebalance to more manufacturing, the identity of that would be less consumption. If China is serious on less dependence on export-led manufacturing growth and a rebalancing towards the domestic economy, if they want to rebalance, let's do it together. The speech seemed to be well received by the upper echelons of the central banking world, with former Bank of England Governor Andrew Bailey saying that he was, quote, frankly very encouraged by Bessent's comments on the IMF and the World Bank. I think the challenge here is that while many people probably had a very similar reaction to that, being pleased to see this very high-ranking Trump official affirming that the US wanted to stay involved in these international institutions rather than burn them to the ground unilaterally, but at the same time, I don't think anyone is quite clear on how much Bessent's words actually reflect the opinions of the administration. In fact, I think if anything, there's a sense that maybe they don't. Bessent has sort of become this interesting bellwether of how much Trump is willing to listen to mainstream financial institutions and Wall Street versus just completely being willing to go it alone. Now, taking a short detour into the world of gossip and innuendo, Axios reports, speaking of Bessent, that Elon Musk and Bessent almost came to blows. One witness said, "It was two billionaire middle-aged men thinking it was WWE in the hall of the West Wing. The two were reportedly shouting at each other chest to chest, with another witness stating, they were not physical in the Oval, but the president saw it and then they carried it down the hall. And that's when they did it again. It was quite a scene. It was loud, and I mean loud." The dispute was apparently over a disagreement about who should lead the IRS, but spilled into more personal territory. Axios wrote that, quote, Bessent criticized Musk for overpromising and underdelivering budget cuts with Doge. Musk clapped back by calling Bessent a Soros agent and accusing him of having run a failed hedge fund. There seems to be a huge number of sources willing to air out the dirty laundry, with one admin official saying, it wasn't a fight about right or wrong, it was about control. It does seem like Elon's days in the West Wing are likely numbered. The billionaire announced during Tesla's earnings call that his Doge work would, quote, drop significantly starting in May in order to allocate more time to his car company, which is facing its own struggles. The Doge tracker claims that the cost-cutting agency has saved the US government $160 billion, a far cry from the $2 trillion promised by Elon on the campaign trail. Hayden the Transit Guy on Twitter summed up the feelings of many when they wrote, "So Doge just cut a bunch of staff and random agencies without making meaningful efficiencies and called it a day? ?
Today's episode is brought to you by Crypto Tax Calculator. If you're looking for accurate crypto taxes with no guesswork, check out Crypto Tax Calculator. Get accurate CPA-endorsed tax reports with full support for IRS rules. For those who have fallen down the on-chain rabbit hole, CTC has you covered with more than 3,000 integrations. They have full support for DeFi, staking, and NFTs. Import directly to TurboTax or H&R Block or share securely with your accountant. Create an account, import your sources, and review. It's that easy.
Hello, friends. I am thrilled to share that Ledger is once again partnering and sponsoring with The Breakdown. Many of you know, but for those of you who don't, Ledger is the most secure hardware wallet for your crypto and logins. It's trusted by 7 million users and secures 20% of the world's digital assets. What's more, Ledger is a lot more than wallets. Over the recent years, they've built a comprehensive ecosystem of products and services, all of which are designed to make digital ownership more secure and accessible. You can buy your Bitcoin with Ledger and Ledger Live, and so much more. Basically, not only do they want to keep your assets secure, they want you to be able to do more with them. Ledger's newest devices, the Ledger Stacks and Ledger Flex, introduce the world's first secure touchscreens, making it easier and safer to manage your transactions and assets. Alongside Ledger Stacks and Ledger Flex, the company also launched the Ledger Security Key app, offering a safer alternative to traditional passwords and enhancing your digital security. If you are in this space, you owe it to yourself to at least check out Ledger and their ecosystem, what they have available to you. So thanks once again to Ledger for sponsoring the show. Anyways, the macro show continues unabated, and we will continue to keep track of the machinations. For the second part of this show, though, however, let's turn our attention to the crypto sphere, where Bloomberg is reporting that Bitcoin is now trading with a much lower 10-day volatility than the NASDAQ or S&P 500. They suggested that, quote, the much reduced volatility could be because Bitcoin is less exposed to derivatives and program trading. Gotta say, never thought there would be a day where the crypto trading bots would be viewed as less risky than institutional market makers like Citadel and Jane Street. Bloomberg suggested that this lack of volatility could lead some corporate managers to, quote, revisit whether it could be more resilient in the complicated global trade environment. Saying this differently, the premier financial news outlet is now suggesting Wall Street might flee their risky S&P 500 exposure to the safety of Bitcoin. Meanwhile, Bloomberg ETF analyst Eric Balkunas is picking up on some crazy hedging behavior going on at the moment. He wrote, this is wild. There's basically record flows going into leveraged long ETFs, but also cash and gold ETFs as people buy the dip and hedge the dip at the same time. May the best DGen win. Now, this strategy of getting levered long on risk assets while also holding gold seems to have an analog in the digital asset space. David Seymour, the CEO of asset manager Wave Digital Assets, said, institutional and sophisticated retail traders are increasingly turning to crypto derivatives platforms to navigate macroeconomic risk and uncertainty. This is perhaps why crypto platforms are increasingly building out their derivatives platforms as traders seek leverage like never before. Coinbase, Robinhood, Kraken, and the CME have all announced new markets, new acquisitions, and new strategies as the fight for control increases over the growing crypto derivatives market. Speaking of Coinbase, interesting comments from their institutional head of strategy, John D'Agostino. He basically said that if you've been selling Bitcoin over the past few weeks, there's a reasonable chance that sovereign wealth funds have been buying your bags. Appearing on CNBC, he said that institutions and sovereign wealth funds were accumulating Bitcoin this month while retail traders were exiting the markets. He argued that these large players were looking for hedges against currency inflation and macroeconomic uncertainty. In a follow-up to yesterday's story on the new Bitcoin joint venture between SoftBank, Cantor Fitzgerald, and Tether, Jack Mallers has been tapped to join as CEO. The Strike founder joined in an announcement on Wednesday, firming up details around the new firm. The announcement said that the company, called 21 Capital, would launch with $3.6 billion worth of Bitcoin in its treasury. Plans are already in place to add to that sizable stack. The company will go public via SPAC and begin issuing equity and convertible bonds, very referentially duplicating the Michael Saylor playbook. Their 42,000 Bitcoin starting treasury will be enough to make the company the third largest Bitcoin firm behind Strategy and Marathon Digital. Tether will have majority ownership with SoftBank as a minority stakeholder. The announcement wasn't clear whether Cantor Fitzgerald would have an equity stake in the company or merely participate as a partner. The investment bank's 5% stake in Tether will give them a slice of the pie in any event. The press release stated, 21 is structured to be a day one Bitcoin native company that will strategically allocate capital to increase Bitcoin per share. The company stated that they intend on, quote, supporting financial products built with and on Bitcoin, including lending models, capital market instruments, and future innovations that will replace legacy financial tools with Bitcoin-aligned alternatives. Tether CEO Paolo Arduino stated, with Jack at the helm, we're proud to support this effort to further Bitcoin's adoption and reinforce its role as the ultimate store of value. And of course, as you would expect and hope for, even something that seems so robustly, clearly good is generating debate among Bitcoiners. Tales from the crypto cheered the announcement, tweeting, "We're winning." But podcaster Daniel Price wrote, "We're being co-opted. This isn't winning. This is not winning." Rob Hamilton, the CEO of AnchorWatch, pointed out, quote, "Some of you really thought hyper-Bitcoinization would happen without institutional adoption? What, $1 million Bitcoin by using it at a farmer's market and bake sales? Did you think all the companies and governments were just going to ignore it?" Bitcoin author Adam Livingston believes that this is a big strategic play from Tether, posting, "Let's be real. This is a corporate exoskeleton for Tether's global liquidity machine to operate inside US equity markets and hoard the scarcest asset on Earth without regulatory speed bumps. It's like giving a cartel diplomatic immunity, then asking them to do quarterly earnings calls. SoftBank didn't join for fun. They saw MicroStrategy mint a 2,000% return on Bitcoin purchases and said, cool, now let's do it ourselves. The company is launching with $585 million in PIPE funding, $385 million of it on convertible notes backed by Bitcoin at a 3-to-1 collateral ratio. That's financial LSD for every structuring desk on the street. The moment Bitcoin rips, they release collateral, unlock capital, and buy more. Recursive Bitcoin compounding inside a public vehicle. This is Saylor, but with a global stablecoin treasury, a high-frequency derivatives desk, and a Tokyo war chest. And here's the kicker, Tether will own majority control. That's like OPEC launching a public oil ETF that owns half the oil and pricing it at NAV. And Wall Street's fine with this. Why? Because the fees are good, the volatility is tradable, and the suckers at home still think we're early. This isn't the institutional adoption phase anymore. This is the corporatized colonization of the Bitcoin protocol, executed through a Cayman shell and priced in your grandchildren's tears. You're not front-running Wall Street anymore. You're being front-fed the illusion that you are. And the price? You'll watch it go vertical while CNBC blames inflation and 7 sovereign ETFs pretend they understand what just happened. Bitcoin's next leg up won't be demand-driven. It will be capital-structured, engineered, manufactured, monetized. Mega corporations are now turning Bitcoin into the new global collateral standard and selling you the derivative. Welcome to the Great Absorption. Hope you brought a chart. Now, obviously, this is a little bit of a pessimistic view. Certainly a well-written one, I have to say. But again, I always continue to think it's healthy that even things that seem as robustly and clearly good for Bitcoin are still debated by Bitcoiners. That's the thing that gives me the most confidence in this asset and in this community in the long run. And lastly today, President Trump has announced a gala dinner for his most loyal bag holders. The top 220 holders of the Trump meme coin will be invited to a gala at the Trump National Golf Club in Washington at the end of next month. While the meme coin experienced a hot launch, it was down 85% in the 3 months following inauguration. The cynics will say this is just an exit pump as team tokens began unlocking earlier this week, and if that's the case, it certainly worked, with the token gaining 52% on the announcement. It's still 75% down from the highs, but of course that's not a problem for tokens allocated for free to the team. Crypto Kaleo tweeted, "If you're curious, around $500 million worth of Trump unlocked less than a week ago, which also kicked off a daily unlock of around $5 million worth of tokens, which will last for the next couple of weeks and be increased in July. Enjoy your dinner, though." Others took a more optimistic view. Runner XBT believes the president is assembling the greatest minds of crypto Twitter to resolve the trade war, tweeting, "Top 5 Trump holders will get to pick new tariffs on China." For now, that is going to do it for today's breakdown. Appreciate you listening as always. Until next time, be safe and take care of each other. Peace.